With yet another interest rate hike from the Bank of Canada and inflation remaining sky high, affordability is still at the top of mind for Canadians. Hello, I'm Adrienne Batra. With me is Professor Sylvain Charlebois, or you may know him, of course, as the food professor. Sylvain, let's talk about the Bank of Canada's interest rate hike. I know that so much of what you talk about and what you always are writing about is with respect to the issue of food, cost of food. This is going to have yet another negative impact on Canadians, correct?
Absolutely. So interest rates historically don't have much of an impact on the food industry and food prices specifically, at least for the short term. But those rates are really violently hurting Canadians right now.
Mhm.
And so if you have a mortgage of $500,000 amortized over 25 years, and you have a variable rate, chances are you're probably paying over $1,000 a month
Mhm.
more compared to last year. So that money you spend making sure you have shelter is preventing you from spending more at the grocery
Mhm.
store. And that's exactly what we're seeing right now. We're actually seeing consumers spending less at the grocery
Mhm.
store despite food inflation. So people are trading down. They're looking for other ways to get food. They're avoiding traditional
Mhm.
grocery stores as well. So it's really habits are shifting quite rapidly as a result of what's going on with the Bank of Canada.
Mhm. You know, the question remains for many of us, why? Why did the bank go ahead and raise the rate again? Look, I understand there was an expectation that perhaps the economy was going to slow down at this point, that we may be in a soft recession. That hasn't happened. But if we are constantly talking about affordability, and we're constantly talking about what is the big thing that we need in Canada. We need housing. We need that development to happen. Your biggest static cost in your life is your home. So, as you said, this is going to negatively affect millions of Canadians in terms of just staying in the current home that they have. But then those choices and those decisions that we're all making, whether, heating, eating, gas, maybe have a little bit of enjoyment, all of that is put on the back burner, so to speak, because here we go again, where we're having to make those very difficult choices about what we are going to be purchasing. And I bring this up because there is this issue happening right now where Canadians aren't purchasing more, Sylvain. They are cutting back in the grocery store. That has negative mental health effects, that has negative health effects, that has just all around been is very negative.
Yeah.
I,
No,
and
it's
the
ve-
federal and the federal government brings in a grocery tax credit, but does nothing. So,
Yeah, it's adding fuel to the fire, really. It's not helping at all. It may help a few households, of course, for a couple of weeks, but that's about it. You see, the Bank of Canada decided to increase rates this week, essentially because uh, everyone's working and a lot of people are still spending a lot.
yeah.
Let's face it, that's the big elephant in the room. And when we look at the data right now, people are spending a lot. I mean, when you look at food service, so we've been talking about food retail, but what about food service? When you look at how people are spending money at the restaurant right now, numbers are pretty strong, especially for fast casual and fast food. I mean, those companies are doing very well. Look at RBI, look at McDonald's. I mean, numbers don't lie. Those
Mhm.
companies are doing very well because people are out and about. We're spending as much money relative to our food budget before COVID than now. And so we're back to where we were in terms of how we spend outside the home, how we spend our food budget outside the home. But still, it's quite violent in terms of how much it costs to keep a roof over our head right now.
Right. Yeah, because at the same time, while we're spending, we're still borrowing. so putting all this on a credit card, which has, longer term financial implications for individuals. But I want to sort of shift this in a way, because it's important to revisit this issue that has happened in the last 6 months to a year. It really came home, drove the point home in the United States, but then here in Canada, it started happening, and that, of course, has to do with the baby formula shortage. You have some further information, and perhaps can put some perspective on what's going on with that.
It's very embarrassing, to be honest. So we're at the mercy of what's going on in the US. So
Mhm,
last year, we saw Abbott being hit by a recall. And since then, we've seen a company struggle with its relationship with the FDA. They're under criminal investigation now since January. So things aren't going well. And they supply 60% of the American market. And we do get a lot of these products into Canada, not so much anymore.
mhm,
Also, Gerber out of Wisconsin was now hit by a food recall. So as soon as some of these things happen, it gets harder for importers to get food into our country. And because of trade barriers, of course, we only transacted with the US. And that's why companies like Walmart and even Loblaw, they've been trying to import products from abroad, Europe
mhm,
mainly, and it's been tough. So Health Canada has approved the importation of some products, but it is Europe. It takes a while for those
mhm,
products to get there. We are expecting some products to enter the Canadian market within the next few weeks, but it's been taking such a long time. It's
mhm.
quite embarrassing and quite frustrating for many parents out there.
One of the things throughout the course of the pandemic, Sylvain, we learned very quickly is that we should producing goods and services here in our own backyard, so we don't need to be relying on outside forces or whatever could be happening in an outside country, in order to take care of what we need to at home. So the question I have is, why are we unable to produce the baby formula, for example, right here in Canada?
So I'll answer you in two ways. One, the economics of baby formula aren't great, to be honest. We're
Hmm.
having fewer babies, and
Hmm.
so a company wouldn't invest. But here's the thing: we do have a baby formula plant in Canada, in Kingston, Ontario. In fact, it's Chinese owned, and they do so. The design of the plant is pretty simple. It buys Canadian milk, produces baby formula. All of it is shipped to China. Now that plant exists. It was partially subsidized by Canadian taxpayers, but it sits idle. It's nothing is going on in Kingston. Why not talk to the Chinese and see how we can supply the Canadian market for a while? When the deal was signed in 2017, there was a clause encouraging the Chinese company to supply the Canadian market. Never happened. So I actually, if I were the federal government, if I were in Ottawa, I would certainly look at that contract.
Well, it seems like it would be worthwhile to certainly, at the very least, visit the idea. But as we've seen in the past, China hasn't been too keen to help out other jurisdictions, other than perhaps stealing our intellectual property. Well, log on to Facebook and Twitter. Let us know what you think, and go to the torontosun.com. Hit that subscribe button. You're going to see commentary from Sylvain and others' coverage of stories you will not find anywhere else.